Hello again, traders. Right, I'm going to cover a few things in this video, but the main purpose of this particular video is talking about what I call the positioning time of day, or what the grinding time of day. And what I mean by that is, before the madness of the Frankfurt Open and the London Open. Frankfurt at 7 AM UK time, London Open at 8 AM UK time. So that's the FTSE, the London, and the DAX for Frankfurt. So I want to be out of my trades really before that. The big money comes in, the big boys finish their bacon rolls and whatever and sit down to make their bonuses. So that's the way I look at it. So as an early bird, as an early riser in the UK, it's been perfect for me. I used to start at 4 AM and gradually I've managed to whittle that down to sort of 5 or 6 AM, although in the summer I wake up with the daylight, so that can be 3-4 AM, and in the winter it's a little bit harder, but your body clock does that for you if you're lucky enough to live in this sort of time zone, as it were. Not so good for some people, I know, but all is not lost. I'm sure, I haven't tested this, I haven't studied it, but I'm sure the same thing would go for the pre-American Open, the pre-US Stocks Open at 2:30 in the afternoon UK time. So perhaps have a look at charts after the manic sort of, I don't know, 7 AM till 11 AM, 12 AM midday UK time, and then possibly a little bit of sideways. Anytime after 9, after the big boys have rushed off to get another coffee after they've made their money, you can possibly find nice moves. And I call them positioning and grinding times, because literally if you've got a perfect signal on your RSI, I'm only looking at gold because I was actually studying this for a possible perfect trade setup, as it were, and I'll talk about that in a moment. But that's the only reason I'm looking at gold. Now, if you followed me recently, we're talking what is it now, April 25th 2022 on Twitter, you'll know that I'm really sort of enjoying just trading 3 pairs really: US 30, DAX, and gold. Gold and US 30 tend to move almost not totally correlated, but if you get good signals in opposite direction on both of them, then you choose which one you want to trade really. But I'm always talking about AAA plus signals, the push down, bust, pull back, break and close, and that was a perfect signal there. You can see these arrows are automated thanks to Dinesh. The RSI histo break of I think I've got this one set, no, it's set to 20, but sometimes I use even as low as 17s, 18s and 19s, the numbers, because the 20 is an arbitrary level set by whoever created this thing, and who knows what time frame he traded. So obviously the faster the time frame, the quicker the reaction you want, and that's why I look at lower numbers, as it were. So back to this positioning thing. So basically I've explained it really. These 3 bars here, we're on an hourly chart. This is 8, 9, or should I say 6, because there's 2 hours difference on my broker time frame. 6, 7 and 8 o'clock. I haven't got the 9 on there, but I used to have it, and it's personal preference. This is just the standard vertical line that I have the indicator for. Don't ask me where it is or where to find it, but they'll be all over Forex Factory. If you're really stuck, I could upload a copy to GoFile or whatever. So but I'm trying to reduce my amount of time on Twitter throughout the English or British summer, as it were, so reducing my workload. But back to this grinding thing. So for I used to set my alarm for 4 or 5 o'clock, and I'd hope to be out of the market by 7 o'clock sharp. Literally I had a rule: be out before 5 to 7, because things can go mad. I noticed this time and time and time again. 5 minutes before the DAX opened, things went a little bonkers. So if you're not out of the market by then, I suggest you think about doing it. But you can watch it and learn yourself. Or if you're in the American time zone, as it were, you need to familiarise yourself to the American stock market. But one thing that just occurred to me while I was talking about it is the difference here. You get very, very little news. That's another reason I love this pre-Frankfurt. There's very little news that will affect things, whereas the difference in the American market is you've got news at 1:30 quite often. You can have news all throughout the day, but it's a pretty benign period during this run-up after the Asian session, or in the afternoon at the Asian session. They've all made their money, as it were. We are actually now in the afternoon or evening, coming up to the evening in the Asian session, and then we hand over to the Frankfurt boys and we hand over to the London boys. So that benign period is why I love it. So that's it. That it is just these nice little. This is not the Asian, but these nice little steady moves to what I call positioning trades are what I love to capitalise on. Not only that, but that means I can make my money before breakfast time. And in the old days, I used to wander off down to the give the dog a walk. My wife used to ask me to get a coffee or a newspaper or whatever, and used to be able to just wander off and watch past all the queues and queues of traffic and watch them all. Not even got to their desk yet, and I've made money for the day. So lovely, lovely feeling. So pre-Frankfurt grinding period, pre-Frankfurt positioning period. And what I mean by positioning is they push it to a level. Let's look here. They push it down to a level, and then boom, up it goes. Look at that open there. I should zoom in a little bit perhaps, but it happens time and time again. They push it to a level. Sorry, that's my alerts. Push it up to a level. Nice steady trend there. That's 6 a.m. That's 5 a.m. 5 a.m. open. Nice little trade there. Okay, we had a spike there, but all of this is tradable, and you can see what they're trying to do. Low, high, high, low, high, 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 low, high, high, and then boom, look what it does. It reverses at the market opens. So similar thing does happen. This is the US time period. I think that might be midday, that line there. But let's have a look on the candle. That's the best way to do it. Yeah, 2 hours difference. That's midday, and they've pushed it down. Then look what happens. They've banged it up fast. That might have been news, but then they've pushed it down. So you've got this down, up, down thing going on here. Lots of volatility. I want to be in this sort of stage of the market. Nice steady trend. Oh my God, these alerts. They don't bother me because I've got the sound turned off, as you can see, and they're just off in the background. I should switch them off and get myself organised, but I don't really need to. So that's that. Positioning and grinding, call it what you like. It is a nice, steady time to be in the market. So looking at this gold now, I'm looking for a potential trade, and something else that I don't often mention. In fact, I don't think I've ever mentioned it. When you use alerts and when you use all your different bits and pieces, bits and bobs, I don't want to be catching falling knives, as it were. I do not want to be trying to trade this down. I want to be trading reversals. So in gold, I mean, there's a saying, don't chase trades. So this is late. This is miles away from the dragon. I want to be trading around here when it's broken through, come back and tested the dragon. So that goes for every time frame. So obviously every time frame ties in together. You need to see what's happening on every time frame to work out what you're doing. So sorry, this is slow. I've got some conflicting indicators on here, and I haven't bothered to get round to sorting out what they are, but it doesn't affect my trading. So start on H4, you can see clearly now this is another break through the dragon, pull back to it, then a bit of sideways, and then it's continued down. You know, the way I always talk about is, you know, if you haven't watched many of my videos, I just picture these as 5-minute charts. You know, I know this is 4 5-minute bars, another 4 5-minute bars, another 4 5-minute bars, and then finally it crashes down. But it's not. This is H4, so this tells you how long you've got to wait for the trades to do what you want to do. It takes eons. No good for me. I want to be in and out of trades on the minute chart. But you get the drift. Every chart looks the same, and that's why I love the dragon, because it just tells you where you are. In other words, we are far, way too overextended in my opinion to the downside, rather. So as we work back, we know I should be considering looking for potential pullbacks. Apologies, I've got an EMA on here that I wouldn't normally have on my charts, but I'm always switching and messing around with templates, so that's why that's there. But you know, it will be something like the 89 on the lower time frame or the higher time frame, and so on and so forth. So that when you switch between time frames, you could see this would be approaching the 89 perhaps on a different time frame. So we know this is overextended. Keep moving down the time frames. I really should get something done about those conflicting indicators. I shall do before my next video, I promise. So we're now on M30, and we can see this RSI's looking. You want to be getting in, same as the 89 EMA scenario, or the dragon scenario. Break through it, pull back, continue. You always want to be getting in when the RSI histo has just crossed over. This is horrendous for considering shorts. This is better, and everything ties in. This is why I love my template so much, because I understand it. Build your own template. You don't have to use what I use. I know this looks messy and horrible, but I understand it perfectly. And you know, a good craftsman uses his best tools and understands what the tools do for him. So now we go to M15, and I will mention that thing that I said I hadn't mentioned very often right now, or ever should I say, and that is, if I'm only wanting to trade long, just set your alerts to tell you only long. Alert only long. I think and EA's are the same, you know, only trade long. So I'm not sure whether the RSI, after all this, I'm not sure whether the RSI histo even gives you that option. It doesn't in this instance. What a wally. I shouldn't have said that. But EAs do. EAs will allow you to only choose long trades. So, you know, if you've got an EA trading these RSI histo triggers, say for example, then you'd just set it to trade short. Simple as that. So for the alerts, all I have to do for this is set a trading alert using MT4, right click it, set it above the price, and it will alert you the moment price rises to that level, and you can drag and drop it that easily. So all I'm interested in trading long, and now building my plan. What do I want to do? I don't want to be trading into that particularly, although this is a 15-minute chart, so you'd be above it on a 1-minute chart probably, and so on and so forth. So setting my plan, and this is an actual plan. I don't want to be trading short, so I want to be trading long. So now I just draw my descending trend lines. I love the line charts, as you know, so I'd be connecting. Let's have a look, zoom in on that, because we don't need to see all of that slope. Connecting lower highs that make lower lows, low high, low, lower low, lower high, lower low, lower high, lower low, and so on. So not valid until that low's broken by that. This is not valid until this low is broken by price here, so this is a valid low, and you can then start to tighten it up with new descending trend lines. This is valid because this one could be tightened up to that level there. This is valid because it broke the low there, and so on and so forth. So all I'm really waiting for is price to come and break through these levels. So once again, you can draw your valid resistance levels on the downtrend. You know, this one you would want to be clear of this one before you consider going long, otherwise you'd be trading into that one there. I hope that's clear, and so on and so forth. So there's a nice gap there, and we can clearly see this is support and resistance here. Support, support, resistance. This is minor support because it's part of a downtrend. Excuse me. It would be valid major support if it was a part of an uptrend here. So there's a nice gap there. And this is, remember, on the 15-minute time frame, so I could set my alert just before there, so I can be well prepared if price starts to creep up to this level. Don't want to be entertaining that. That's not a decent enough gap, although it is a 15-minute, so we might as well put a level on there. That is a valid resistance level because it's broken that low. So now to the 5-minute chart. And we can see we've got a whole different sort of picture going on here. We're starting to approach the dragon, the 34, well, it's 3 times 34 EMAs if you weren't aware. If you can't get the dragon on your charts, just put the 34 EMA on your chart 3 times, the high, the close and the low, and that will then give you this band of the dragon. This is the 89 EMA. That's easy as well to put on your charts manually, so you don't need the dragon indicator. You've got it all there on the EMAs. So this is starting to pull up now, and then you know you want to sort of plan your new up trend, as it were, and all you have to do is put an ascending trend line in there and just remind yourself that you need to have a low, a high, higher low, higher high, pull back, and then you'll be above the dragon. The dragon will be turning up. That's part of Sonic's rules, and your alert will have gone off to remind you what you're watching. Remember, I don't want to be selling this again. You know, that's not set in stone. If it just doesn't, the buyers haven't got the power in the market, and they do all the, you know, if you employ the sort of Elliott wave terminology, if they do an ABC pullback, can't make the fourth, and then that's the 1, 2, 3. The fourth would be the potential pullback to the downside. If there's no power in it, then it will just continue on down, and swing 4 then becomes swing 5 to the downside, and vice versa. If it has got the power and everything looks right, and this was another reason for this video, you know this is totally wrong, because all of this is wrong. We've got divergence on here, which is nice, which is what I would expect to see, and which I would want to see, to be honest with you. Lower lows making higher lows. So this is all looking good, but then we just wait for everything to look perfect. All you've got to wait for is the reverse of this, although this isn't perfect because it's got all this noise here, but the reverse of this to the upside. Bust down, pull back, break and close. Bust up, pull back, break and close up, and then just make sure you tick all your other boxes. So on M1 we've got the divergence in there, so this is looking good for a potential little scalp here, but you can see there's nothing interesting here at the moment. We should really be above the 89 EMA. Come back and test it, and there you will see your low, high, higher, low, higher, high. Just ascending trend line starts to look right. So that is it. Making a plan, and then just setting alerts and using your multiple time frames, multi-time frame analysis to double check everything you're doing. But this is a plan. This is a plan. You mustn't trade it, well, unless everything, absolutely every box is ticked. I don't give trading calls. That isn't my job. And quite frankly, if you're relying on someone else to call trades for you, that is entirely what I disagree with, because you will never, ever, ever make money trading doing that, because you might get your trading signal, unless you're really ultra disciplined. What do you do when that signal's stopped, or when you leave that trading room? You start to get itchy fingers and you will throw it all away. So it's much better to devise a method of trading for yourself, or learn from someone else, and then just employ your rules. Brian Sav on Twitter and YouTube does some great videos. He reminded me of something that was very, very important, and mentioned that he just had a break away from all the social media and all the different stuff, rooms and stuff, and possibly a small break from trading as well, just to reset yourself, as it were. You know, you only need a week off or a few days to reset yourself. I actually took months and months and months away from all my mentor and all the group and all that lot. You don't have to be Billy, the opposite of Billy No Mates, to be you don't have to be the most popular person in the world. You don't have to be the one that's making all the fantastic trades. You have to just make a method that works for you, earns money, puts bread and butter and a roof over the family, on the family's table, and a roof over their head, and do it once a day, and do it the following day, and again and again and again. It's not about glamour. It's not about being the big I am. It is about making money. Sorry for the bit of a preach there, but there you go. Gold is looking interesting. As I say, we've talked about the grinding, positioning time. I'm so relaxed now. I don't care, and you should be relaxed with all your trades. There is no need. That is part of the reason I make so many trade charts and videos. No need for FOMO. I used to suffer from it, fear of missing out. There is no need, because excuse me, on the 1 minute, 5 minute charts, providing you plan your trades using higher time frames, there are trades everywhere, literally hundreds and hundreds and hundreds of them every day. Stocks, indices, forex, cryptos, even metals, you name it, grain, oil, corn, orange juice, coffee, you name it, there are trades everywhere. Thanks for watching. Have a great day.